and in GST audit, now it is not known as audit, it is just a reconciliation statement which we need to provide every time rates have changed and turnovers have changed. So Karan will be giving more idea on it. And I like to briefly introduce our association activity. Now from December onwards, we'll be having monthly one lecture. We are trying to have monthly one lecture to amend, invest in your knowledge and get better thing of it. With this brief thing, I request Charvik to introduce our chairman and speaker today. Thank you.
Thank you, Hitesh Bhai, for giving me the task of introducing our today's speaker, CA Karan Deepak Lodaya. Karan is a qualified chartered accountant since 2015. Currently, he is pursuing LLB. Professionally, he is associate associates since 2011. He is specialized in the fields of service tax and GST, appearing before various appellate authority, including Mumbai Sestat. He is also a co-compiler of budget booklet published by the KDOC Association. He has delivered lots of talks at seminars related to GST and other topics by various forums like WRC of ICI, KDOC Association on this topic. He is also a contributor to various publications published by WRC of ICI. We heartily welcome CA Karan Lodaya to today's session.
Thank you, sir.
Rajiv Bhai has specifically said that no need of introduction of him. We respect our chairman, and I would quickly give the dais to CA Karan Lodaya and request him to continue with the present webinar. Okay. Thank you.
Thank you, Charvik Bhai. First of all, I'm thankful to KDSU Association for giving me opportunity for sharing my thoughts on the recent amendment in GST. How we will take this seminar is that I will first take with the amendment, give you the crux of the amendments, and thereafter request Rajiv sir to give his insight on the same. And after 4 or 5 issues in that, we will take up the questions from the floor. Charvik, is this okay? This is how we should follow?
No issues, sir.
Yes. So first coming to the amendments now. First amendment. One second. Can everyone see the screen?
Yes, it is very much.
Yes, Karan.
First amendment is related to amnesty scheme for filing appeals. Why this amnesty scheme was needed? I will just give the background. There's in section 169 in the GST Act, which provides for the mode of communication of orders. So one of the mode for communication of order is through uploading on GST portal. Yeah. So there are many instances where the order has been passed by the proper officer and they are uploaded in the GST portal. But department assessee was unaware of such a order being passed because they never used to see portal, etc., etc. So there are numerous cases involved in this, and the assessee comes to know only when there is a recovery from the departments towards the GST liability, etc. So the various writ has been filed at high courts, stating that to condone the delay of the assessee for filing appeal before the commissioner appeals. But the 107 only provides for the condonation of commissioner appeal for 3 months. So writ were been filed here and there. There are at least 1,000 plus writs were been filed. So government thought it is necessary to provide an amnesty scheme. So through notification 52 by 2023, they have provided an amnesty scheme. What does this amnesty scheme says? First, when an order passed by a proper officer on or before 31st March 23. And the assessee could not file his appeal within 3 months. That is the period within which he has to file the appeal. So he has not filed the appeal within 3 months. Or appeal filed by him was solely rejected on the ground of non-filing appeal within 3 months. For all these cases, for all these two cases, they have provided an amnesty scheme. This amnesty scheme, the assessee is required to file form APL 01 on or before 31st January 2024. And the important thing is that he must require to make payment of 2.5% as pre-deposit, additional pre-deposit. And this 2.5 is required to be paid in cash. So this is very important. You can file the appeal for the delay in filing appeal. You can again file the appeal on amnesty scheme, and state on payment of 2.5% of pre-deposit. And what about the appeal which have been already filed before the appellate authority and they are yet to be decided? For that also, this MS scheme is applicable. What it states, appeal against the order filed in accordance with the section 107 pending before appellate authority before the issuance of notification shall deemed to be have been filed under this notification if the assessee makes payment of additional pre-deposit of 2.5% in cash. So this condition has to be fulfilled, then he would be eligible to opt for the amnesty scheme. Then one of the condition for this scheme that if a order is only for interest and penalty, then you will not be eligible to go under the scheme. No appeal under this notification shall be admissible in respect of demand not involving tax. Now, how to make additional pre-deposit for appeal which has already been filed? Because while filing the appeal, it is mandatory that we have to file APL 01, and through APL 01 only GST portal allows you to file the pre-deposit. So how to file additional pre-deposit for which appeal has already been filed? For that, either we have to pay through DRC 03 and thereafter intimate the department that I have paid this DRC 03. Please treat this as DRC 03 as pre-deposit towards amnesty, pre-deposit for filing appeal towards amnesty scheme. And thereafter, what about order passed after 31st March 23 and appeal could not be filed within 3 months? So in the amnesty scheme, they have provided that appeal which has been filed, appeal which could not be filed before, order which has been passed before 31st of March 23. In our case, if the appeal is filed after 31st March 23, then what would be the recourse available? According to me, only recourse available would be to approach the writ court and tell them to condone the delay. Raju sir, your take on this?
First of all, thanks to the organizer for having given me an opportunity to chair the session. First of all, about the GST amendments, the topic of the day is concerned. Hitesh Bhai and Charvik have stated that already this is a very fast changing law, and left and right you get the notifications, clarifications, and that's how it is very difficult to keep a track on the subject. So a lot of compliments to our organization for having organized such kind of meeting. I'm sure it will go a long way, and in the interest of the member, it will be useful for them. Coming back to the topic, I have gone through the presentation of Karan. It's a very lengthy, cover, exhaustive. Only challenge for him is to cover all his slides will be a big issue. But anyway, he has taken all the very important, relevant amendment. Right now, we are on about the filing of the appeal. He has explained. I have 2-3 concerns on this. He has stated that there is a section 169 which he has given reference to, and it is unlike our old provisions which we are having in excise and service tax, as well as the VAT, indirect tax regime. By and large, there was no such mode of service of notice that uploading on the portal. That was not a situation in the old law. In GST, the section 169, which is having, which has 6 different modes listed, and the officer can choose any one of the mode for the service of the order. Now, one of the mode is uploading on the portal. See, getting the notice or order by post or email, perhaps it is easy and it will be possibly delivered or read and reached by the to the person. That's fine. But on the portal, if it is uploaded, I'm sure there are many assessees who are, especially the small ones and the moderate one. They may not be visiting the portal, and even if they are visiting portal frequently, they may be visiting only for limited purpose of filing the returns, etc. And they may not be looking at the relevant tiles where any such orders are pending and all. And that has caused a lot of hardships. The bona fide person, the genuine person, also missed the bus of filing the appeal in time, and that was a reason a lot of representation, rather lot of petitions have been filed in the court for the waiver, since the commissioner has no power to waive the condonation beyond a timeline of 1 month. So practically 3 months is a time limit for filing appeal, and thereafter you get 1 month's time more. And once that timeline is for 4 months is over, thereafter he has no such power. And we know that as on today we have no tribunal. Of course, the notifications etc have come out, but a formal tribunal is not yet formed, so you have no recourse but to go to high court. Now high court is a lengthy process, not affordable and for many of the people, but that perhaps representation has gone on that, and the GST council realized that yes, it is need of the hour that we should come out with some scheme whereby we should condone the delay. Not necessarily every person missed the bus is a genuine, but substantial portion of the persons who have missed the bus of filing the appeal in time have a genuine cause, and that's how this amendment has come. Now, only the I'll say the dark side of this amendment, two or three issues. Once, first of all, why they have kept cutout date of 31st March 23? Because if order which was received before 31st March, or if it is only related to that order for which you have not filed appeal in time. Now, you just think of somebody who have received the order on 1st April or thereafter, and if he has also missed the bus, why to distinguish when you are giving wholeheartedly such a good scheme? I personally feel they should have come out with a provision or notification saying that maybe cutout date of say June or September or till to date. Something of that kind they could have given would have been in the interest, because still some people will have to justify. Whereas the other people, like person who has missed the bus but order is before March, he will get the benefit of amnesty, and only after a few days in April, other person is covered, he will have to move to court. So there will be discrimination coming up just by a couple of days also. That's unfair. The second is this is applicable only when there is a demand for tax. So if somebody is contesting only the interest or penalty, especially there may be many orders where only penalties is being contested. Why to keep him away? In the sense, he is not been given this opportunity. Perhaps the pre-deposit provision in GST talks about the 10% of the tax amount, and perhaps government feel that 2.5% of tax is fine, but when penalty and interest is concerned, there is no such pre-deposit in GST. I think for the limited purpose of condoning the delay, they could have added a similar 2.5% for the timing or some kind of a late fee, and they should have allowed this thing, and even those orders should have been considered. But as on today, we don't have such provision. Barring these two or three things, I think by and large it is a very welcome provision in the interest of the taxpayers. And please note that the last date to file this appeal is 31st of January 2024. So you have reasonably good time, and perhaps the professionals, especially the chartered accountants, are concerned. Their busy season by and large will be till October. So December, January is a time when they can devote. So I think it's a welcome provision barring these one or 2 points. Yes, Karan.
Yes, sir. So now going forward, every assessee should at least go to GST portal weekly once, just like we go to temple. We have to go to GST portal and check whether there is an order or no. Now, another changes is related to corporate guarantee. Let us take an example. What corporate is? Tata Motors. They are related. Tata Motors and Tata Technologies are related parties, and Tata Motors has given a corporate guarantee of 100 crores to HDFC Bank for giving loan to Tata Technologies. So and Tata Motors has not charged any consideration to Tata Motors for giving this corporate guarantee. Now the issue comes whether GST is applicable If yes, then what is the value? So as we all know that under GST, anything other than goods is service. So giving corporate guarantee becomes service because it is not in goods, so it becomes a service. Now, there is a schedule 1, which states that activities to be provided to be treated as supply even if without made without consideration. In that, one of the entry is supply of goods or services between a related party or distinct person when made in course of furtherance of business. That means if there is a related party and there is a transaction between them for supply of a service or goods, and there is no consideration being charged between the related parties, then also it was treated as supply for the purpose of section 7. So in our case, Tata Technologies and Tata Motors are related parties. So any transaction without consideration between them will be treated as supply. Now the issue comes, what will be the value of supply? So according to our department, in various cases, the issue show cause notice picking value
देखो
as per
पन्ना
their whims and fancies.
बोल नहीं चल रहा है कर
As per their whims and fancies. And the always assessee would have taking a view that as per rule 28 there is a provision which states that when the recipient gets the ITC, the entire ITC, then whatever value declared by him is to be treated as an consideration for supply. So this was the case going on. There are various quote writ been filed or appeal been filed at various forum. So from by notification 52 with effect from 26th October 23, what amendment has been taken place that which states that notwithstanding any content in one, that is what assessee was trying to tell, that uh, the whatever consideration being charged is open market value if the recipient is eligible for input. So notwithstanding to sub rule 1, value of supply of service by the supplier to a recipient who is a related person by way of providing corporate guarantee shall deem to be 1% of the value of guarantee or actual consideration charge, whichever is higher. So suppose in our case, the Tata Motors has given 100 crore of guarantee. So of that 1% would be deemed to be the value of consideration. That is 1 crore would be deemed to be the value of consideration. And accordingly, 18 lakhs would be payable. Now, the question arises, what about corporate guarantee given before 26th October 23? So always the assessee would argue that since there was no provision being inserted, rule 28 was there, and open market, whatever value has been decided by me is the open market value. But in according to me, it would be better if we take an the stand that we should treat that 1% of the guarantee as the value and pay the tax accordingly, because both the recipient and the supplier would be eligible for ITC. And then another question comes, what about corporate guarantee given to non-related parties? So suppose Rajiv sir has given me corporate guarantee on behalf of me to bank. So we are not related parties. So whether Rajiv sir will require to pay GST on the same? The answer is no, because in the section 7, when transaction is with an unrelated party, consideration is important. If there is no consideration, section 7 won't be applicable. Hence, if a corporate guarantee is given to non-related party, the question of supply doesn't arise under section 7. So should I move forward?
Yeah, only one thing. I'm sure you explained it very nicely, but the corporate guarantee is the issue perhaps many of you must have faced while attending to the GST audit conducted by the department. Especially nowadays, we know in tendering or for funding, borrowing, etc., the guarantees have become a very common feature, which has been asked by not only the financial institution, banks, as well as sometimes the government during tendering also. And most of the corporate guarantee transactions are between the related party and associated parties, where government feel that although there is a service, but there is no consideration being charged by, because both of them are associated or related parties. The in various cases the department has raised this issue during audit. There is no doubt that it is service per se and it is liable to tax in the erstwhile provision before this amendment which Karan has drawn. But the question was stuck at what is the value, because there is the rule says that it is a open market value, and it is very difficult to find out the, rather I'll say impossible to find out open market value of the guarantee, because every guarantee will have different features, liabilities, etc. So there cannot be standard rate available, and that's how the litigations would have continued. So what government has done is only given the valuation mechanism after introducing this amendment. The for the past period, current has said that yes, you have option available to contest by saying that nothing is charged is also an a value, or whatever value the I have charged, since the other person is getting the credit thereof, should be accepted. But I think I will try to put it like this: ki there was no machinery provision available before this amendment for computing the value and the tax liability, because there is no doubt about the taxation is concerned, but the doubt was only about because mechanism was not available for valuation. And that's why if at all you have missed the bus or for the old 1% is concerned, if you are following, it will definitely go litigation free, saying that we can take a plea that look, government has now already amended the rule and stated the value should be 1% or whatever amount charged, either of these two, correct? So that will be ideal way. Of course, it is your appetite whether you want to litigate or no. But this is something which was really badly needed. I personally feel it could have been stated that yes, it is from the day one this value is applicable. Then also there would have been a much difficulty, because many transactions have already been done, and you cannot introduce machinery provision after a length of 5 to 7 years, because 2017 onward these kind of transactions are happening. So let us see how for the old matter how things will be decided, which will be settled only at higher forum. But going forward we have a good recourse. Yes.
Sir, Motichand Bhai has some query.
Yeah.
Please raise the hand.
Yeah. We can organize. Hitesh bhai, you want to make it interactive? Allow him. No issue, sir.
We can take the questions at the end. Otherwise, the webinar will not end.
So I
Okay.
leave it to the organizer. We are okay with that. What I suggest, feel, Charvik bhai, let the participant write in chat box, and someone from you can moderate and you can ask relevant at that point of time. Then it will have a, you can track it fast also, and you will able to make out whether it is relevant to the topic or not. That will be better. But I leave it to the organizer. Whatever you feel, huh?
Yes,
Right
it is also
suggestion,
a good
Rajiv.
suggestion.
We'll accept that, sir.
Yeah.
Now coming to another important amendment, exemption to governmental authority. Uh, One second. Yeah. Let us take this exemptions with an example only. So there is an SRA, Slum Rehabilitation Authority. It has granted a letter of intent to ABC Builder, and ABC Builder is required to demolish the existing slum and build a new building and hand over the flat in the new building free of cost to SRA. And in turn, SRA will grant FSI of 4 to ABC Builder. This is the common this thing ki SRA gives you FSI, you build free of cost a building for the slum people, and you get then FSI. So the question arises whether GST is applicable on free flat allotted to SRA by ABC Builder. So this is a barter transaction. On one hand, the builder is giving construction service to the SRA, and on other hand, SRA is giving 4 FSI to him. So this is a purely a barter. Then the question arises ki whether this GST is applicable as per Section 7. Even barter exchange is a supply. So according to me, GST is applicable on this transaction, and ABC Builder was required to pay GST on the flat allotted to SRA. Now government has came up with an new exemption. What this exemption states: following service provided to governmental authority by way of water supply, public health, sanitization conservancy, solid waste management, and slum improvement and upgradation will be exempted from payment of service tax. So service provided by governmental authority by way of slum improvement and upgradation is exempted. So whether this SRA is a governmental authority or no. So what is meant by the governmental authority? Government authority means any board or any authority or board or any other body set up by act of parliament or state legislature or established by government with 90% or more of the participation by way of equity. So now we have to check whether SRA is a governmental authority. For that, we have a reference of Section 2HC of Maharashtra Slum Area Act 1971, which states that slum rehabilitation means slum rehabilitation as stated under Section 3A. What does Section 3A states? Every slum rehabilitation authority appointed in the subsection 1 shall be a body corporate named as SRA and shall have perpetual succession and a common seal. And other section states that a slum rehabilitation authority is headed by chief minister. So this is an authority which has been formed by the state legislature. So an SRA is an authority established by act of state legislature. Therefore, according to us, SRA is a governmental authority. So now service provided by me, that is builder, to SRA, that is free flat provided construction service, will be exempted since I have provided services to SRA. Now, therefore, the free flat allotted to SRA will be exempted from payment of GST. This is a welcome amendment from the government because there are huge litigation going on this area, whether the GST is applicable on this free flat allotted to SRA or no. In service tax era also there was an issues going on, but there is a Mumbai the sister decision which states that since the sale is not there, the word sale is missing, so hence this service provided sale made by builder to SRA is not liable to service tax. But according to me, that decision would not be applicable under GST because under GST, the scope of supply is wide enough to cover the barter as well as etc. Sir.
So I agree partly with Karan. Of course, it is not free from litigation, but there is another way of looking at it. The views given by Karan to that extent is bit on the conservative side to avoid the litigation. I'll try to put it this way that SRA is concerned. This is very common in a city like Mumbai, slum redevelopment and construction. So it is a scheme which is formed by the authority, and either you want to participate or not participate is your choice. So it is a builder based on the scheme. If it is acceptable, he should accept the scheme and participate, and if it is not accepting, there is no issue. But having accepted, he cannot amend any of the clauses. In the sense, I hope you understood what I am trying to say. The scheme is already drafted structure, and as a builder, either you have to opt or not to opt. That's all. So when it is like that, so when you look at the supply, the definition of supply, and if you try to correlate that, there is always a willingness from the side of the customer as well as the supplier. In normal transaction of supply, the buyer is willing to buy and the seller is willing to sell. That is what we call it supply or barter, etc., etc. Both the side there is a willingness. Here what happened is that the willingness is concerned, government has come out with a blanket scheme. So there is a possibility that one can argue, which Karan has referred to about the CSTAT decision of Mumbai Tribunal, that it is no element of sale, but I'll try to put it, one can say it is not a consideration, but it is a condition to contract. That can be also one of the ground. Like SRA has come out with the scheme and saying that, look, I will give you 4 FSI provided you construct this building for the slum dwellers and we will allot it to slum dwellers. So it's become a condition, and condition to contract and consideration to contract are two different things. And still there could be an argument that yes, it was not liable to tax. However, why the provision is welcome for the reason that the intention of the government perhaps is not to collect tax, because ultimately this is a slum redevelopment. So it's a the government is the scheme is basically for the poor section of the community, and housing for each person. That is the whole idea behind the scheme. So perhaps government don't want to make it costly, and so why to unnecessary levy, and that's how they have come out with this notification. It would have been a great if this notification would have come retrospectively from 1st of July, because many of the builders case we have seen when the audits have been conducted, the invariably these kind of paras have been raised and show causes have been issued to the parties who have not paid the taxes on the SRA portion. So yes, in sum and substance, this is a welcome provision. But only thing effective from 1st of July would have made him more this thing, because for past period, the litigation, I don't know whether it will, how long it will go. It can reach to the tribunal or even at a higher front to that extent. Yes.
Yes, sir. Thank you, sir. Now, another amendment related to composite dealer. So,
Karan, 1 minute in a chat box, there are one or two questions which are relevant. No, we'll take it now only. You would like to
yes,
take it, because otherwise we'll not have grip. Somebody is
Correct.
writing here, Poonam is writing is same SRA applicable to MADA? That is what? Yes, your view?
Sir, first we have to see the constitution of Mahada, whether the constitution of Mahada is same as SRA, whether it is a governmental authority, whether it fulfills the criteria of it has been formed under state legislature, or it has 90% or more of the equity by government. So if that criteria has been fulfilled by Mahada, then obviously we can take this SRA exemption from Mahada as well.
Correct. And then further, somebody is asking subleasing of MIDC plot, whether GST is applicable. I think leasing is different, has no relevance to this SRA part is concerned. Friends, the questions which have been put in the chat box, which are relevant to the topic, we'll try to deal now, and thereafter, which is beyond the topic, we'll try to cover at the end, subject to time permit.
Yes.
Okay.
Yeah. Before this amendment, assessee opting to pay a tax in the composition levy, that is assessee who has a turnover of less than 1.5 crore, was restricted to supply goods or services to e-commerce. So, for example, suppose my turnover is 1.5 below 1.5 crore, and I have opted for composition levy, and I want to sell some goods or goods through e-commerce platforms such as Amazon. Then I was restricted. I was not allowed to do the business. If I do the business, I would not be eligible for composition levy. This was the before this amendment, this provision was there. Now, with effect from 1st October, the composition levy, the registered person shall be permitted to supply goods through an electronic commerce operator. So, from 1st of October, if I opted for composition levy and I supply goods through e-commerce operator, then I am allowed to do that. However, I am not allowed to provide service through e-commerce operator. This is very important. Goods are allowed through e-commerce operator. Services are not allowed through e-commerce operator. So now let us take one example. ABC is a partnership firm is engaged in business of selling air condition and is also engaged in providing AMC services. They are registered with Amazon, that is Eco, for selling air condition. They are only for selling air condition. They are not for providing service of AMC on Amazon. ABC are following interest supply during FY 22-23. Sale of air condition 1 crore, and in that 1 crore, 18 lakhs is through Eco. Another the stream of business is AMC services, which is not through Eco, that is 8 lakh rupees. So whether I would be eligible to offer composition scheme, the provision provide that I am not eligible to provide any service. So let us look at that. There is a section, a registered person aggregate turnover of 1.5 crore is eligible to take the composition levy. He may opt to pay under composition levy. There is a second provision to Rule 10(1), which provides that a person who opts to pay tax under composition levy may supply service of value not exceeding 10% in a state in a preceding financial year of 5 lakh rupees, whichever is higher. So in our case, my turnover for preceding financial year is 1 crore. Out of that, I am 10% becomes 10 lakh rupees. So I am eligible to go under the composition scheme if my service is below 10 lakh rupees. So, and this is the amendment: the registered person shall be eligible of under scheme if he is not engaged in supply of service through ECO. So I am not providing service through ECO. I am providing service other than ECO. So I am eligible for this scheme, that is composition levy. So this is a welcome amendment. This is just to help the small traders who are carrying on business and who are doing service also. So from 1st October, ABC firm can opt to pay tax on a composition levy even if it's selling goods through e-commerce operator. This is clear? Should I go ahead?
Yeah, Karan, you can go ahead, and it's a welcome provision because today's young blood, by and large, is well versed with e-commerce, and to encourage the e-commerce, especially for the small traders, this provision was inserted. I am sure going forward, even the inputs, the service portion also will be allowed, but perhaps it is a matter of we have to wait for a few more days, but that also will come. Welcome provision to that extent.
Yes. Now input tax credit. That is there's a new clause been inserted in section 17.5. What is section 17.5? 17.5 is block credit. Block credit means ITC would be blocked if you do some of the following activity. And one of the activities there, goods or services received by taxable person which are used for which are used or intended for activity relating to CSR, that is corporate social responsibility, under Companies Act 130, under section 135 Companies Act. So corporate social responsibility. So suppose there's a mandate under the company say if my turnover is about some limit, I have to compulsory make expenditure towards corporate social responsibility. Just like in COVID, many companies have provided masks and all that. That is a corporate social responsibility. So with effect from 1st of October, no ITC will be available for goods or service used for fulfillment of CSR obligation. So this is a very, I don't know why government wants to restrict the ITC when I'm doing some social responsibility, helping the poor. Then they are restricting my ITC. That I don't know why this section has been inserted. So now onwards, that everyone tells corporate social responsibility, it would be credit subka restricted, CSR. And every time company says कि I want the ITC, government always says नहीं दूंगा मैं. Sir, should I go ahead?
Yes, go ahead.
Now restriction on filing returns. Before this amendment, I can file my GSTR 1, GSTR 3B as well as GSTR 9 for any period at any point of time. For example, for FY 17-18, I can file the ITC today itself also. But with this amendment, with effect from 1st of October, if I have not filed my GSTR 1 or GSTR 3B or GSTR 9 for a period of 3 years from the due date of filing these returns, then I will not be eligible to file these returns. This is just a discipline to be maintained by government for filing returns. Now, this is very important. Transportation of goods. Now, for example, Reliance Industries located in Mumbai, they have entered into contract with P Shipping Line to deliver the goods. This is P Shipping Line, which is also located in Mumbai, to deliver the goods to Saudi Aramco. So what would be the tax charged by P shipping line to Reliance Industry, whether it would be CG, SG, or IG, is the issue. So before the amendment, the section 128 proviso provided that where transportation of goods to a place outside India, the place of supply should be the place of destination of goods. So in our case, the place of destination of goods is Saudi. So the P shipping line would be charging IGST to the Reliance Industry because the supplier is located in Maharashtra, that is Mumbai, and place of supply is outside India. So by going by section 7 of IGST would be charged on this transaction. Now, with effect from 1st of October 23, the government has omitted this proviso that the place of supply shall be destination of goods. So now onwards, POS, place of supply for transportation of goods, shall be, if provided to a registered person, location of such person. If provided to person other than registered person, shall be location where the goods are handed over for transportation. So in our case, the supplier is in Mumbai. P shipping line is located in Mumbai. Reliance is also located in Mumbai, and both are registered. Then the place of supply would be Maharashtra. Then CGST and SGST would be charged on the said transaction. Erstwhile, it was IGST being charged. Now this is CGST and SGST has to be charged. So this is very important amendment, and all the consultants and everyone have to look at this and advise the client accordingly. Sir, yeah.
Yeah, nothing. I'll just give only one line. This was just giving very whimsical results rather. When service provider and receiver both are within the same state, still the services on which tax was required to pay based on IGST. I think there were some portal issues also at that point of time about this, and portal was not accepting or some issues were there. But of course, it's welcome now. It is settled and they have corrected, and it is the CGST going forward will be applicable. I think welcome provision to that extent.
Yes. Now, another amendment in transport industry, transportation of goods by vessel. Suppose there's a Walmart, which is located in USA. They are appointed Merck Shipping Line, which is also located in USA. And Walmart has stated to Merck Shipping Line to supply goods to Reliance Industry, which is located in India. So the question is whether GST is applicable on this transaction, because one person, the provider is located in USA, Merck Shipping Line. Receiver is also located in USA, that is Walmart, and only the importer, that is a Reliance Industry, is the importer in this case. So there is no transaction between them. So here there was a notification entry 10, which provided that service supplied by person located in non-taxable territory, that is in our case Merck Shipping Line, by way of transportation goods by vessel from place outside India to custom station clearance in India was required to paid under RCM by importer. This is something was very, means when two person are doing a transaction outside India, and India only the goods are coming to India, then importer was liable to pay under RCM. So for that, there were various issues going on, and one of the case was went to Supreme Court, that is Mohit Minerals. In the Mohit Minerals, Gujarat High Court has Supreme Court has upheld the decision of Gujarat High Court and stated that IGST is not required to be paid under RCM by the importer on the goods on the this RCM for the freight services provided by the outside party. No separate levy of IGST and RCM is to be made on Indian importer for supply of service of transportation of goods by shipping lines, since it is violated of section 18, section 8, because levy, when that 2% not in India only, then how the levy could be triggered? Whether we have jurisdiction all over the world was the question in this. So Supreme Court has told no, this is a violation of section 8. We don't have the jurisdiction all over the world for 2% doing transaction outside India. So with this decision, government came up with a notification number 13 by 23 IG. Thereby they omitted entry 10 with effect from 1st October 23. Thus, with effect from 1st October 23, importer shall not be liable to pay GST under RCM on service supplied by person located in non-taxable territory by transportation of goods from place outside India to customs station of clearance in India. So, in our case, that Reliance will not be required to pay RCM the tax under RCM for service provided by person located in non-taxable territory.
Yeah, this particular amendment is nothing but fallout of that Mohit Mineral Supreme Court. Actually speaking, technically, those who are not well versed with many provisions, just to give an idea, the charge can be created on any transaction under GST when the transaction is happens to be in India, and either the provider or the receiver of the transaction should be in India. It was very unfortunate that notification which was referred herein saying that the tax is to be discharged by the importer of the goods on the transaction of supply of services of transportation of vessel for which he has no concern whatsoever. In the sense, the shipping line and the exporter located in USA, they enter into some transaction of transportation of goods by vessel, and the freight is also being paid by those party, received by those party. Indian party counterpart has nothing to do, not involved in that, except receiving the goods part of it. Still the tax liability was to be discharged. This was one point where actually very difficult to digest, and that whether charge can be created, that was one. The second part is when his goods are coming to India, you pay customs duty. Over and above, you also pay IGST because customs department recover your IGST on the value of the goods as per the powers given in the GST. And while valuing those goods, the import freight is also added in the valuation. So you have already charged the GST and collected the GST as well as customs duty while levying tax on the import. So it was resulting into a double levy. And that's how the case has rightly been decided in favor of the assessee by Gujarat High Court. Later on, it was challenged by the government in Supreme Court, who upheld. The decision is a very long decision, but really the relief came. But if you read the decision preamble and the entire paras, perhaps till you reach to the halfway mark or more than that, you will feel that Supreme Court may not be deciding it in favor of the Gujarat High Court the way it has been pronounced. But I think this decision is concerned is very important, and now fortunately government realized that yes, there cannot be tax, and therefore this amendment from 1st of October. I think a lot of matters have been set right by this, and it's a big relief to the industry to that extent, especially the importers are concerned. Yes, Karan.
Yes, sir. Now, GST 9 annual return. One small amendment, not amendment exactly. They have also extended the exemption for financial 22-23 for aggregate turnover. If the aggregate turnover is below 2 crore rupees, then you don't have to file the annual return. That is, it is an optional for you to file annual return for FY 22-23. Same for GST and 9C, they continued with limit of 5 CR. If your turnover is aggregate turnover is less than 5 CR, you don't have to file GST and 9C, that is reconciliation statement. And if your turnover is less than 2 crore rupees, you are not neither required to file GST and 9C nor required to file GST and 9. That is not mandatory. Now, goods supplied through ECO. Suppose there is one small vendor who is selling his product to ECO, and his turnover during the financial year is just 15 lakh rupees. That is a very small dealer, and he is selling some goods through ECO. So today, as on today, before the amendment, I mean to say, the section 24 mandate person who supply goods or services through an electronic component operator to obtain registration compulsory. So if I sell only 1 rupee through 1 rupee of my product through ECO, I was required to get compulsory registration under section 24. This was the before amendment provisions. Now, after amendment, what government has stated, a person making supplies of goods through ECO having aggregate turnover less than amount prescribed under 22(1). That is 22(1) is turnover, aggregate turnover for which you are not required to obtain registration. that is 40 lakhs for goods and 20 lakhs for services. So here only goods are there, so 40 lakh rupees from obtaining registration if he fulfills all of the following condition. First condition is that he should not make any interstate supply of goods. That person should not be supplying goods. Suppose he is located in Maharashtra, he should not supply goods to Gujarat state. Then such person shall not make supply of goods through electronic commerce operation more than one state or union territory. That means suppose I am located in Maharashtra, I have branch office at Bangalore. So I can only opt for this exemption if I am going through eco only in the state of Maharashtra. If I have not, if I am providing opting to pay under Bangalore also, then I will not be eligible for this exemption. Such person should have a PAN number. Then this PAN number should be validated on the common portal, and the common portal will generate the enrollment number to you. Then enrollment number should be provided to the eco, and thereafter eco will allow you to supply goods through him, and you're not required to take the registration. But if the once the registration, if the limit of 40 lakhs is crossed, then you have to take the registration, and then this benefit will go. So this is also a welcome amendment to that extent, but it is hardly for a small time taxpayer. It is less than 40 lakhs person. I don't know how many are there and who are doing this business through eco.
No comments. You can proceed.
Now verification and furnishing of bank details. There's an amendment in CGST rules which provided that before this amendment, the person who is opting for registration, if he has not made other authentication, then his business premises will be verified by the GST officer. At that time, that person is required to be present over there. So suppose now this Mukesh Ambani is there. He has not opted for other authentication. Then he has to compulsory be at his business premises when the GST officer comes. This was something horrible to that extent. So they have amended this provision. They told that presence of applicant will not be necessary during physical verification of place of business. Now, another amendment in Rule 10A. Presently, the person applying for registration is required to furnish bank detail within 45 days from date of grant of registration or due date of GSTR 3B to be furnished. So suppose I have obtained registration on 1st of October 23. I have to provide my bank detail by 15th of November or the due date to file a return of GST 3B. That is, first return would be of the October month, which is 28th of November. So I have to provide my bank detail within 15 days. So there were many cases which have been came up with to government that what persons are doing, they are obtaining the registration by fraudulent means. They will file that GSTR 1 on 10th of November. They would provide huge outward supply, and thereafter they would vanish, and they would not file GSTR 3B, and the recipient will get the ITC. This was the procedure being followed by many of the maybe fraudulent dealers. So now government has came to the knowledge of these issues, and they amended GST law, and they have provided that the bank account details should be furnished within 30 days from the date of grant of registration or before filing GSTR 1. So now government will not allow you to furnish GSTR 1 unless you provide the bank details. So that that flyby type of registered person would be vanished by this notification, by this amendment.
This is very, very important amendment, although looks procedural, but a lot of leakages of revenue government will able to prevent because of the act of these fly-by-night kind of a dealer who are involved into bogus hawala bill. And we have seen the sufferers on many occasions, rather I'll say most occasion will the honest taxpayer. So this particular provision will keep a check on it, And I think we will do. I'm sure all of you must have received notices for such kind of transactions which has taken place in last 6 or 7 years of GST. Going forward, I'm sure we will not, because the at the moot level, at the root level rather, I'll say, they are being prohibited or prevented from filing or uploading GSTR1. So ITC related issue will reduce, and that will reduce substantial litigation also.
Now, this is one of the very important amendment, renting of residential dwelling. There's a notification, RCM notification, which has been whereby entry 5AA has been inserted, which provided service by way of renting of residential dwelling to a registered person shall be paid under RCM by said registered person. For example, suppose there is a Safi hospital. They have they have taken a residential flat on rent from an individual, let's say Mr. A. So before, since this there was an exemption which states that service by way of renting of residential dwelling for use as residence was exempted before this amendment. So person A will not charge GST since it is a residential dwelling used for residence. Now, the amendment has taken place, which states that when registered person is taking this residential dwelling, then he will require to pay GST under RCM. So, this is explanation being given under this entry, which provided exemption under this entry this entry shall cover service by way of renting or residential dwelling to a registered person where registered person is proprietor of a proprietorship concern and rents the residential dwelling in his personal capacity. What is this? This states, suppose I have proprietorship concern. I am doing the business over there, and I have a residential flat in my personal capacity, and I have rented that flat. So whether I will require to pay under RCM or no, because I'm registered. So this clarification states that you are not required to pay under RCM since you have provided a residential dwelling on your personal capacity and not on the proprietor in the capacity of proprietor. So before this amendment, that is this amendment has taken place from 17 July 22, residential dwelling when used for residential purpose and which is given to a registered person, it was exempted. Given to unregistered person, it was still exempted. When when residential dwelling given for commercial use, it was to a registered person, it was liable to be paid under forward charge mechanism by the person providing the service. That is, who is providing the residential dwelling on rent. By unregistered person, it was still under forward charge only if his turnover crosses the limit. Now, after this amendment, if a residential dwelling is given a residential dwelling which is used for residence and is given to a registered person, then tax under RCM would be payable. That is, Safi hospital being registered and that that residential dwelling is being used by his doctor and it has been given by individual who is not registered, then he would require to pay under RCM. If given by unregistered person, then there is exempted. For use as commercial person, when residential dwelling is used for commercial purpose, then and it is provided to a registered person, then still tax will be paid under RCM by the registered person. And provided to unregistered person, it will be taxable under FCM. So first and third column, in nutshell, emotions ka wholesale stock. In nutshell, when a residential dwelling is given to a registered person, then that registered person is required to pay tax under reverse charge mechanism. This is very, very important. And because of this, you will require, there are many assessees who are required to take a registration in the state from where there is no supply at all. They are required to take the registration. Yes, sir.
Actually, the whole idea is, it's only unfortunately this has been brought under the reverse charge. The idea behind is that when even if your premises is a residential one, and you have given it for on lease basis for use of the same for commercial purpose, then government want tax and they don't want to give you exemption. That is the first logic. And secondly, because most, or rather there are many corporate houses, they have taken the premises for the residence of their employee as well as for outside Mumbai in the class 2 cities. They have taken a premises for residence from where they also operate the business address of the company also. So even it is for residential come commercial. The government don't want to give exemption, and for that this particular provision has been inserted, rather exemption was amended, and also the reverse charge notification was added. Yes, there will be a dark side is there is this being under reverse charge. Many of the state, Karan has stated that you need to take registration just because you are paying tax, or rather you are paying rent for the offices, although not making any supply, just to discharge the liability on the reverse charge. Of course, this credit you will get it if eligible for ITC, you will get it, but it is definitely a hardship to that extent for those entities. Yes.
Now, one amendment in Goods Transport Agency, entry number 93 of notification 11 was been substituted, whereby GT has been given option to either pay under forward charge at rate of 5% without availing ITC, or take the ITC, entire ITC, and pay under forward charge as 12%. 5% without ITC under forward charge, 12% with ITC under forward charge. So if the GTA wants to opt this option, then he has to file a declaration anytime between 1st January to 31st March of the preceding financial year. So suppose I want to opt for FY 23-24, I want to opt for under forward charge mechanism. I have to file the declaration before 31st of March 2024. Means between the period 1st January 24 to 31st March 24. And if similarly, if I want
Karan, it is before the beginning of the years. I think you have incorrectly said this declaration has to be filed in the preceding January to March. It should be filed before the year commences.
So first, I want to opt for 1st April 24. So I have to file on 1st January 24 to between 1st January 24 to 31st March 24.
Yes, correct. But you stated 23. That's how I correct.
Sorry. I'm sorry. Then if the GTA wants to revert back from, he don't want to fall under forward charge, and he changes his mind to be under reverse charge only, then he has to file annexure 6, sorry, the same between the 1st January to 31st March of the preceding financial year. So an option has been given to GTA whether he wants to opt under forward charge, he wants to pay under, he wants to avail ITC, he can take ITC and pay under forward charge 12%. He don't want to take ITC, pay under forward charge 5%. If he don't want to opt for forward charge at all, then he can opt under reverse charge, that is recipient would require to pay under reverse charge. Further, if GTA does not exercise option itself to pay GST under GST on supply of service, same shall be paid by recipient under RCM, what I stated just now. So in nutshell, if GTA does not exercise option to pay tax, then a recipient will require to pay under RCM at rate of 5%, and recipient won't be allowed to take ITC. If the GTA exercises an option to pay a tax and he don't want to take the ITC, then GTA can pay tax at rate of 5% under forward charge. If GTA exercises an option to pay tax under forward charge, and if you want to avail ITC, he has to pay tax at rate of 12%. And he has to file the declaration accordingly. Now, another amendment, this is related to zero rated supply. What is meant by zero rated supply? Zero rated supply is export of goods and supply to SCZ. Export made by person and supply to SCZ. So presently, a person making zero rated supply has two options. Suppose I am an exporter I am exporting goods outside India. So I have option whether to make payment of IGST and take the refund of the same, or don't pay the IGST and claim the refund of unutilized ITC. I have the option to access any of these things. So, with effect from 1st October, the government has restricted this provision, and they stated that only for those class of person who make zero rated supply and payment integrated, only for class of person that they will recommended, they can only offer with payment of tax, and for class of goods or services which they recommended will only be allowed to make with payment of tax. In other words, all the person will be required to make a payment of the will require to export without payment of IGST only for classes of person or class of goods which have been notified by government will be eligible for with payment of tax. So accordingly, notification 1/23 was issued, whereby government allowed all the exporter of goods or services to allow with payment of tax, except cigarette, pan masala, hookah. Means a person engaged in business of supplying goods like cigarette, pan masala, hookah cannot make export of goods with payment of tax. He has to compulsory make without payment of tax. So the person like SCZ, if I make supplies to SCZ, that was also as on 31st of July. If you see, it was also mandatory required to pay under without payment of tax. Means if I make a supply to SCZ, I was not allowed to make with payment of tax. I would compulsory make without payment of tax. So CBIC then they came to know that this is the ambiguity. So they provided notification 5/23 which stated that with effect from 1st October 23, all supplier who supplies goods to SCZ shall be eligible for payment of shall be eligible to make export with payment of tax and claim the refund of tax so paid. So the only for that as on today only cigarette those who are engaged in business of cigarette, pan masala, hookah, etc. are restricted to make export with payment of tax.
Yes, actually, the idea behind this notification, or rather restricting certain industry for claiming the refund only for the unutilized ITC as against IGST, is on two accounts. First of all, government want to keep a check on certain industries, especially the cigarette, pan masala, hookah, etc. Are concerned is certain industry which government is not encouraging more for the ITC, as well as they want to keep a check of it because there are a lot of B2C transactions happening in this. That is one part of it. Secondly, government want this notification 5, which has been stated here, is specifically to avoid the confusion which was prevailing in the mind of industry, that whether that restriction is only for export or even for the SEZ. Mind well, the old notification 1 of 23 of 31st July has restricted export, and export is one which is covered under, it is a one branch of zero rated supply. So zero rated supply as defined in section 16 is one about the supply made, that is export of goods or service, and second is about the supply to SEZ. Both are independent, and SEZ are not, when you are supplying to SEZ, it is not at all an export, but it remains in India, because export as per definition of the GST means taking goods from India to outside India. And that's how this clarification has come. I think the intention of the government is very clear, not to give a refund, because when you make the payment of IGST and file your claim of refund using shipping bill, that refund comes very fast without any checks, and that's perhaps that checks government wants, and that's why they are restricting or preventing or prohibiting certain industry to go by this route. Yes.
Yes, sir. Now warehouse goods. Currently schedule 3, that is schedule 3, neither supply of goods nor supply of service. Supply of warehouse goods to any person before clearance of home country shall be treated as neither supply of goods nor supply of service. For example, suppose I have imported some goods from USA and I have kept that goods in a warehouse before making home consumption. Before clearing it for home consumption, I stored in a custom bonded warehouse, and from there I make a supply and take outside India. Then that is not liable to GST. It is being treated as neither supply of service nor supply of. It is treated neither supply of goods nor supply of service. Sorry. So presently, I was not required since it is neither supply of goods nor supply of service. It is not an exempted supply. Therefore, I was not required to reverse the ITC on this. However, with effect from 1st of October 2023, Section 17(3) has been amended, which provided that for calculating exempted supply, activity specified in schedule 5, that is sale of building, and activities or transaction as may be prescribed in respect of supply of warehouse goods to any person before clearance for home consumption will be treated as exempted supply. So the government will prescribe some goods like a cigarette, tobacco, something like that. They will prescribe. Only for that it will be treated as exempted supply, and reverse under 17(3) would be applicable. For other goods, the other activities or transaction, it will not be falling under exempted supply, and you can avail the entire ITC of the same. Now coming to this very important concept.
Correct.
Yes, sir.
In the chat box, there is one issue. I have given a reply in writing. I think somebody has asked, Charming Moma has asked. You can refer and give proper explanation to her.
What if goods are sold through his own portal electronically? Means here you yourself has a website and you are selling that through your website. So this is not an e-commerce operator. You're not an e-commerce operator. E-commerce operator is a person who is managing an portal, and where person comes over there, he sells his goods, and if another is in e-commerce operator, there should be three parties involved. One is eco, another is supplier, and one should be the receiver or this purchaser of the goods. In your case, there is only one. You are selling your goods directly from you to the purchaser. So according to me, you are not an e-commerce operator. Your own website is not an e-commerce operator.
Yes, correct. So there is no restriction whatsoever. You can carry on with that. I hope this is clear to Charmi. Yeah. Proceed.
Yes. Now this is very important concept. ISD or cross charge. I think this is what is meant by. Let us first what is meant by ISD. ISD means an office or supplier of goods or service which receives tax invoice under Section 31 of the Act towards supply of input services and issues and prescribed document for purpose of distributing the credit to another branch. For example, suppose I am giving audit services and my client has 10 branches. So I will always raise my bill to the HO, but I have provided service to all the branches. So what HO is required to do? HO is required to, I have to issue my invoice to ISD. ISD, depending upon turnover of all the branches, they will distribute the credit. So credit, yes. So in case of audit fees or software license, there is only when third party is involved and third party is giving the consolidated bill to the HO, then HO is compulsory required to register itself as ISD and then distribute the credit. This is what the law provides. Then another concept is related to cross charge. What is meant by cross charge? Cross charge is between two branches of the same entity when they do some services. When they provide one service, one branch provides services to another branch, then it would be falling under cross charge. Cross charge has not been defined under GST Act, but this is a layman language term which has been used by department, professional, etc. Cross charge. In simple word, cross charge nothing but when one branch provides service to another branch, it is known as cross charge. For example, HO of head office doing accounting for all branches. Thus, HO is rendering accounting services to his branches. Therefore, this would be required to be cross charge. So there is a fundamental difference between concept of ISD and that of cross charge. ISD is merely for distributing the credit which has been provided by the third party. And in the cross charge, there is a service involved. One branch is providing service to another. This concept is very important. people tell ki ISD and cross charges can be interchangeability used. According to me, ISD and cross charge is mutually exclusive. If you get the invoice from the third party, you have to compulsory, and you have for all the branches you have to compulsory do ISD. And if there is a service involved between two branches, you have to do the cross charge. So now the because of this, there were a lot of this thinking. Many of the person and not opted for ISD registration. Means they are not gone for ISD registration, and they used to take the invoices of audit fees in the HO, and HO used to cross charge to the branches and like that. So this was been decided. This issue was crop up in council meeting, and council meeting told to clarify on this issue. So they have issued a clarification, circular dated 17 July 23, which provide that first issue they have taken up two issue in that. First issue they have taken up is availment of ITC by HO for common services procured from third party. Whether HO is mandatory required to follow ISD, or he can cross check that the common service received from third party. The clarification is that HO has option to distribute either by ISD mechanism or do cross charge. In our case, suppose there is an audit, I have raised an audit invoice on the HO. So HO can either distribute through ISD mechanism, or he can cross check to his branches. And another clarification was issued if in respect of internal generated services provided by HO to BO, whether HO is mandatory required to issue invoices, or if it does not issue the invoices, it is all right when entire ITC is available. So they have clarified that in accordance with provision rule 28 of CGST Act, in respect of supply of service by HO to branch offices, the value of said supply of service declared in the invoice by the HO shall deemed to be the open market value of such services. So suppose I have rendered some services, accounting services by HO to the branches. So whatever HO decides, suppose HO decides 1 rupee as an consideration for providing this services, then it would be deemed to be the open market value for the purpose of GST. That is what Rule 28 states. And this circular goes one step ahead, and it states that if invoice is not being issued, we would assume that it is a nil value, and that open market value would be nil, and there is no need to do cross charge for this. So according to me, this circular is not in consonant with the law. It is contravention to the provisions of the law, because ISD and cross charge are two different concepts altogether, and they are telling ki you have option to do this either cross charge or ISD. So this circular, if the assessor, if the client is in this thing, he has issued show cause notice or etc., we can use this circular and state that there is no requirement to do cross charge or go for ISD mechanism. Sir, your take on this?
Yeah. Well, friends, this ISD and cross charge is not understood by industry as well as the departmental many of the officers. Karan has rightly stated 2-3 important points. First of all, both are separate and independent terms, cannot be interchangeably used. That's very important. Secondly, cross charge is not a term which is defined rather in the entire GST Act. But one has to understand from the name reflect whenever there is a supply of service between two parties and there are only two parties involved in this transaction, it will become transaction of supply, and for that you have to charge, which they call it as a cross charge. And input service distributor, there will be always three parties. There will be one person who is supplying the service, and the receiver of service may be more than one. Then only that distribution concept will arise, and for which invoice is raised only on one. So this is been clarified by way of circular, but the circular, the way it has been worded, since it is favorable to the assessee, perhaps the assessee will use it for his benefit, but the clarification is not in consonance with the law to that extent. And in my view, this circular is bad in law to that extent that the circular state you can interchangeably used for the past, and then for going forward you have to. So that is absolutely incorrect. But anyway, since it is in favor of assessee, one should not, think on this direction. But going forward, ISD means be careful whenever more than two parties, ISD is must. And when there are only two parties, it is only cross charge. That's all. I think that's all current from my side. But there is one interesting question which I have replied in chat box. You can go through it and I can give your view. It is asked by Charmi again. You can go through that.
It is related to warehouse maintained by Amazon and Flipkart. Some vendors are using those warehouse for dumping their goods, and they require registration, GST registration, and for that place of business is required. For that place of business is required. So they have appointed virtual office. Appointed virtual offices for the same, but now GST officer is cancelling his. Sir, just a clarification on this. How they have registered virtual office on that? What is virtual office?
I think, Charmi, if you are listening, you can unmute yourself and throw light or clarify.
Yes, sir. This question is, they have appointed means they have just set up one office where for the purpose of GST registration, since GST registration is compulsory, and place of business, they want to show it as a place of business. Hence, they have just set up one, we can say, for showing the address, they have appointed one virtual office.
So they might have entered into a rent agreement with some of the vendor, correct?
Right.
Huh. So that would be their place of business, correct? And
Right.
from that place of business, they are storing goods. They are storing goods or taking
No,
a
they are
good.
no, they are not storing the goods there because it is in the Amazon or Flipkart warehouses. They are storing the goods because it is uh the agreement is like that they have to store the goods in those warehouses only. They cannot
So
store it in their warehouses or in their place of business.
you might have some agreement with Amazon or Flipkart.
No, they are not doing any agreement with us regarding same.
Hmm.
And for that purpose, since they have to bill, like my client has to bill to Amazon and Flipkart or to other sellers, hence he needs GST registration. And if we require GST registration, place of business is compulsory. So for
Correct.
that purpose, and they are having n number of offices in different
Correct.
states.
Correct.
So how do we proceed?
So according to me, in this case, you are storing goods at Flipkart, Amazon. So for
Right.
storing goods, it is also place of business. If you read by section two, I don't remember
Two
section.
Right.
subclause 85 that
Huh.
define place of business, and place one. There are three limbs to it. The limb is specifically state that it is a place from where the business is ordinarily carried on and includes warehouse and godown or any other place where taxable person stores his good. So what Charmi is trying to convey, the moment you store the goods any of the place, even if supply is not happening from there, still it becomes your place of business.
Business.
And
Correct.
once it is become place of business, it's optional for you to take registration. In your question, it is not mandatory unless you do supply, but it is optional for you. And in your question, you have written that department is cancelling. Department has no right to cancel, according to me. It is legally you have taken the number because you demonstrate that you are storing the goods over there, or you demonstrate that from that address you are supplying the goods, in the sense you are raising the invoice for supply of goods. Either of these two if you are having, then there is no issue. And I will go one step ahead. If you really want that registration, you can also maintain the books of accounts over there, because the place of business definition is very vast enough to cover also the place where taxable person maintains the books of accounts. So if that is being done, then also you can do it. So I think you can come out of it based on the actual transactions is concerned.
Okay, sir.
Sir,
Okay.
sir, only one issue in that. Sir,
Yeah.
why that Amazon Place and Flipkart Place will not be required to be registered?
No,
Because
Amazon and Flipkart place is not required to be registered. I'm not saying. She is saying that Amazon is storing the goods. So Amazon, when storing the goods in their godown, it is not at all Amazon's good because I have never
correct.
supplied it to Amazon. So at that
Hmm.
point of time, it is my goods. So wherever I am storing my goods, that registration is a mandatory on the other end because
Correct,
because
correct.
because your supply, delivery, etc., outward supply is going to happen from there only. So it is based on the factual metrics. But I'll tell you, her question was department is cancelling. That is absolutely incorrect. They cannot
Correct.
cancel it. You will need to ensure that, and actually you have to fight it out. It's a good case, and we ensure you that 100% department has no right to cancel.
Sir, they have already cancelled.
So you can challenge them and you can explain the case, file a appeal. That's the only recourse you have available on that, and 100% things will come in your favor.
Okay, okay. Thank you, sir.
Yeah.
Yeah.
One more question here. Volume is proper, please. No, it's this is only. I think your few people are not able to hear. I feel okay. Fine.
Uh, so cross charge and the ISD and cross charge two different concept, and accordingly you have to take this forward. And whenever you are structured, you can take this recourse of this circular. Now going forward, e-invoice. Now from 1st of August 23, a person having an aggregate turnover of more than 5 crores for any of the preceding financial year from 17-18 onwards is required to do e-invoicing. That means, suppose my turnover for FY 17-18 was 6 CR, and thereafter my turnover reduced to 2 CR, 3 CR, 4 CR, 5 CR. And as on the 1st August, my turnover is less than 5 CR only. Then also I have to do the e-invoicing because this specifically provides an aggregate turnover in preceding year from FY 17-18 onwards. So even if in 1 year, from in any of the 1 year, if my turnover crosses 5 crore rupees, I have to do e-invoicing from 1st of August 23. This is very, very important. Many people are reading that as in a preceding financial year. It is preceding year from 17-18 onwards. So e-invoice is required, and e-invoice is not required for government department, local authority, GTA, multiplex operator, passenger transportation service, etc. And e-invoice is also not applicable for B2C transaction. And it may be noted that e-invoice is applicable for export, though it is not applicable for B2C transaction, but it is applicable for export e-invoicing.
Yes, correct.
The current limit of 10 crore notified under 7 is stand modified to 5 crore rupees with effect from 1st August 23. So this is the e-invoice metrics, how they are brought up. Initially, a person having aggregate turnover more than 5 crore, e-invoice was applicable from 1st October 20, then 100 crores from 1st January 21, 50 crores, so and so forth. And now 5 crores, it is applicable from 1st August 23. So now, to even a small businessman having turnover of about 5-7 crores will be coming on the e-invoicing. Now, this is another example.
One question in e-invoicing.
Yes, sir.
If a person is a CHA,
Huh?
customer's agent, he
Correct.
makes the reimbursement payment,
Hmm.
and that amount is included in the invoices, like reimbursement invoices. Then the
Huh.
turnover, what should be counted? As the agency charges or total of reimbursement and everything?
Sir, according to me, the if the concept of pure agent is been fulfilled, then you don't have to include that value in the aggregate turnover. only those turnover in which the pure agent condition is not been fulfilled, you will require to take it as an aggregate turnover, because that is not a turnover of your per se. So if your pure agent, that is your receivable income is the more than 5 crores, and your non-receivable is less than 5 crore, then you don't have to take you're not e-invoice is not applicable to you. Means in turnover that receivable is not to be included.
Thank you.
Now, service provided by Indian Railway. This is this amendment has been taken place, whereby service provided by Indian Railway. Before this amendment, all the service provided by Indian Railway were exempted, be it transportation of goods, passenger, renting of services by Ministry of Railway, Indian Railway, etc. Now they have withdrawn the exemption, that service provider Ministry of Railway, that is Indian Railway, other than transportation of goods and passenger, exempted from payment initially. Now they have withdrawn this exemption. Only exemption is applicable for transportation of goods and passenger now. So now Indian Railway providing a renting of service of their wagon, it would be liable to tax under forward charge mechanism. And also amendment has been made in RCM notification to provide that business entity who receives service from Ministry of Railway shall not be liable to. In other words, it would be liable under forward charge. Means now Indian Railway providing you service other than transportation of goods and passenger, they would charge you the tax under forward charge mechanism, and you are not required to pay under RCM.
I think while Karan, while explaining, I think you missed out one thing. I think you have stated, see, the point is what he was trying to say is Indian Railway is concerned prior to this amendment has exemption for all the services except for transportation of goods and passenger. That was exempted. Now that particular transaction, yes.
Sir, there was another exemption which provided exemption to transportation goods and passenger, only except for AC.
Yes, yes, that is for second class and all, but otherwise, any services other than transportation of passenger and goods provided by Indian Railway was exempted from payment of tax. Now, within the transportation of passenger, it was only the second class and all those were exempted, correct? Now, with this amendment, what they have done is the services other than transport of passenger as well as goods are also been brought to the tax. That exemption is been withdrawn, and that particular exemption will now not only withdrawn, so it becomes taxable, and it will not be liable under RCM, because there is another notification which says services received from government is under RCM, but especially from the Ministry of Railway, when the services are coming, it will be under forward charge. This was an amendment actually which has come up.
Correct, sir. But still, if you go by second class, matlab sleeper class, that would be exempted.
Yeah, that is within that is exempt, but this amendment is relevant to the other transactions.
Yes, sir. Yes, sir. Now, revocation of cancellation or registration. Suppose the department has cancelled your registration. So you were required to file the revocation of cancellation within 30 days initially. Now, there's an amendment with effect from 1st October, which provide that a person whose registration has been cancelled by proper officer may file a revocation of cancellation within 90 days from the date of service of order. So that 30 days they have increased to 90 days, 3 months. And they have also provided that if a sufficient cause is shown to the commissioner, that 90 days can extend up to 180 days. Now coming to Rule 88D. This is mismatch between GST 2 and 3B. This is very important rule. This rule has been inserted with effect from 4th August 23. This provides that when there is a mismatch between, first of all, after 1st January 22, there is an amendment in Rule 16.2 which provides that registered person can avail ITC only of that goods and services which are available, which are auto-populated in GSTR 2B. Means suppose my GSTR 2B is showing as 100 rupees, I cannot take ITC more than 100 rupees because 16 to itself restrict me. So now if a person who has taken excess credit that appearing GST at 2B, then a GST portal will automatically provide him with an intimation in form DRC 1C, requiring him to either pay the difference or explain him the reason for the difference. So I have seen this. If you take suppose your ITC is ITC in 2B is 100 rupees and you are availing 150 rupees. The very when you file the GST at 3B, the very next moment GST portal gives you the intimation in DRC 01C, requiring to explain the difference or explain the reason within 7 days. So if you give the explanation and the proper officer is satisfied, he will drop the proceedings of DRC 01C. And if not satisfied, then he will issue the SCN under 73 or 74 as the case may be. But here one of the important fact is to be noted that if you don't file a reply for DRC 01C, then you will not be allowed to file a GSTR 1 for the subsequent financial year, subsequent month, sorry. So you have to compulsorily, first of all, you don't have to avail excess ITC then appearing GST 2B. Suppose there's a genuine hardship, means genuinely you are availed short ITC in previous month and you are availing now that ITC, then there would be a mismatch. Then you have to explain that mismatch to the proper officer. And if you don't explain or you don't provide a reply to DRC 1C, then you will not be allowed to file GSTR 1 for that period.
Correct. Correct.
Now, this is another amendment, interest on delay payment of refund. Now, initially government was giving you interest after expiry of 60 days from the date of receipt of application till the date of a refund. So suppose I have filed my application on 1st of October. After the expiry of 60 days, I was eligible for the interest. From 61st day, I was eligible for interest. Now, after amendment also, I'm eligible for interest after 61st day only. Only the change in the amendment is that manner of computing that interest. Previously, it was 6%. After 61st day, it was 6%. So government, if the government has given you refund after 100 days, 100 minus 60, 100 minus 60, 40 days, you will given the interest of 40 days. Now they have provided manner of computation of this period of delay. And in that they have stated that the period shall not include any period of time beyond 15 days from a receipt of notice in DRC that applicant takes to file a reply or the applicant has not furnished bank account. Means suppose you have filed a refund application. You have been issued show cause notice. Suppose you are issued a show cause notice on 1st of October. After 1st of October, you are given time limit till 15th October 23 to file the reply. You have taken an adjournment and filed the reply on 30th of October. So you have taken 15 additional day. Correct? So while computing that delay, in current position, suppose there is a delay of they have given you refund after 100 day. On 100 day, they would reduce it 60 days minus 15 days. You have taken the time limit for filing a reply to show cause notice. So you will only get a refund for 25 interest for 25 days. This is what the amendment has taken place. Sir, any take on this?
No, you are very well explained. That's perfectly all right. The idea is government is concerned. The attitude and approach of the current government is to maintain a strict discipline to the extent the provisions are concerned. The only unfortunate part is all majority of the discipline part is concerned is imposed upon the taxpayers, and there is a less accountability as compared to that on the officers. We have rarely seen the refunds coming within 60 days, although it has been provided, and on the other end the interest. So, but that is bound to happen. But slowly and gradually things are changing for sure. So this provision to that extent is concerned, although it bit harsh for the taxpayer, but there is no other choice. One has to, get acquainted with such kind of disciplines.
Yes.
Yeah.
So with this, I have completed my all the amendments. Any questions we can take on if the time. Charvik bhai, can you?
Yeah, Charvik bhai, is he there? Charvik or Hitesh bhai, anyone?
Yes, Rajiv bhai.
Yes, Charvik bhai, Karan is done with his presentation. I think there are some questions were there in chat box which were not relevant on the, in the sense which were not on the topic. But now, if you want, we can take. It's all up to you. We have no reservation, considering the time and all. Yeah.
Yeah, we can definitely take the questions. But before that, a small activity we can do is
Yeah.
all the participants, the committee members, and everybody, we can just on our video. We would like to take a photograph or screenshot of all the participants in a single screen. So request everybody to start their video. And Karan bhai, can you just?
Yes, yes, sir. Yes,
Yeah.
I've done that.
Thank you. Just in a quick 1 minute, request everybody to start their video. We'll just give a couple of 15-20 seconds more for other people also.
In the today's digital world, this is the only opportunity to be visible. So go ahead and start your cameras.
Well said. Yes.
We can take the photo now.
Yes, yes, yes. Yes, done.
Yeah. Thank you, everybody. I think there was one question which was left unanswered on the chat box. Charmi Moma had raised a question. Subleasing of MIDC plots, whether GST is applicable. In brief, the MIDC land was given to one of the company, and the company has subleased the land to different industries. So GST impact on that.
So should I answer?
Yeah.
Should I?
I don't know answer only. You are at least.
Sir, I also don't know answer.
You are daring. At least you have a daring to give answer. Good.
First of all, we have to check whether you have to check the original lease agreement, whether that MIDC lease is giving no MIDC plot, whether that is on that structure would be maybe a structure would be there. So whether the structure would be the property of MIDC or it would be the property of the person who has made that building or anything. And if MIDC that if you are giving that lease, no, according to me, lease would be liable to GST because there is specific entry schedule 2 mein, leasing of land is also liable to GST. So in my view,
But sir, this is subleasing. Leasing is GST is applicable on leasing, but this is the case of subleasing. Like MIDC is giving on lease to company and company subleasing it to some other person. Say for example, me, I'm taking a plot in that area, and that I'm taking from the company and not from MIDC. So they are
correct.
subleasing it to
So
me.
this is not subleasing. This is assignment of a lease. This is
No,
not
no,
a
this
sublease.
Yes, but in agreement, when I am taking the land from that company, so in that agreement, this is a specific mention that this is on sublease.
According to me, this is an assignment of lease in the favor of third party by the lessee, and MIDC would be the confirming party in this. So accordingly, assignment of sublease would definitely be covered under GST, and GST would be applicable on this. Sir, your take on this?
There are two things. There's a difference between the assignment and sublease. First of all,
Right.
the first of all, no MIDC. To my knowledge, I have gone through a couple of agreements of MIDC, CIDCO, and all. Not a single organization allow you to sublease. First of all, if you read the original agreement, you cannot sublease it. So, but anyway, GST implication is different. So, according to me, first of all, it's a illegal transaction to that extent. So, violation of the original contract. That you please check. No lessor will allow you to sublease without his consent, and his consent he will not grant the consent. And that's where the current is coming into play, that he will allow you to do only assignment. And assignment means what? You are replacing the lessee. Earlier there will be X was lessee and now it will be Y. So that is what is assignment. That's how assignment and sublease will come. Anyway, that is about the legality of transaction. Your issue is about the payment of GST. Now, first of all, is there any exemption to this transaction of sublease? According to me, there is no such exemption. Fine. Secondly, go to the
There is ambiguity. There is some ambiguity, right?
No, ambiguity. I am asking about there are two things. You are asking from the taxability, correct? No. So taxability, there is one thing. Is there first of all any exemption? So in my view, as on today, I have not come across any exemption. Okay, if you know, because upfront I am trying to recollect, but if something is missed out, you can correct me.
Sir,
In my knowledge, there is no exemption to sublease, first of all. So if that being the case, why it is not taxable? You refer section 7. Section 7 is defining supply. Supply's definition is very wide. Secondly, whether it is goods or service, I don't think you have any doubt that it is service. It is not goods per se, looking at the definition. Then you look at the section 7, which is supply. In my view, supply, all kind of supply, it will be covered. And then when it comes to the classification, I think you take a schedule 2 classification, which includes lease. When lease itself is a service in classification, why not sublease can be service? So that is then going by this all analogy, in my view, there is no doubt in my mind that it is taxable at the rate of whatever 18%, the same rate which is applicable to lease, and that will be liable to tax. Of course, the earlier part which I have stated that transaction is illegal means the MIDC can take back your lease. If you read the original contract, no, 100% it will have been written that you cannot sublease it without my permission. And that means you have to take NOC or permission, which they normally invariably don't grant only. That is not possible. Anyway, but I am subject to correction. But about taxability, in my view, yes, it will be taxable. That is my take on this.
Thanks, sir.
Yeah. Charvik, anything else? Charvik bhai?
There are no questions in the chat. If any member wants to have additional question, we have a couple of minutes.
By the time anybody asks the question, 1 or 2 minutes, being a past president of this organization, first of all, compliment to the entire team under the leadership of Gautam bhai. The 2 or 3 things, I have no right to give any suggestion, honestly, because you people are doing wonderful job. But Divya Ben has stated that in today's world, technology plays very important role. And I think these webinars are concerned, doesn't require more efforts and cost for organizing. And secondly, in our members are concerned, young and dynamic, and a lot of capable and knowledgeable members are there. It will be great on the part of the committee if such kind of periodical webinars can be organized, barring those peak season of say July or September, etc., so that the more and more youngsters are invited to lead on the topics of their interest relevant to the profession. It will give a 2 opportunity. One is a knowledge sharing information for people like us who are more outdated, and it will be youngsters who will be encouraged and they will get a platform to lead on this thing. Today is one such example. Let me tell you, Karan knows the subject better than what I know, honestly, since we are working in the same office. But what is missing is the opportunity and the ground which today KDO has given. Like that, he is looking for many such. Practice makes man perfect. And over a period, I'm sure he has miles to go. It's on I'm not on a lighter side. It's a genuinely. So Charvik bhai, with you can convey this message to the president. I'm sure he is already aware of. but try to have many such programs by webinar and give opportunity to youngster. And there are many seniors who will be knowledgeable, would like to share the session, and that's how you can take combination. Perhaps this is what we are doing at Chamber of Tax Consultant at IDT committee over there, where we have one chairman. Anyway, I thought that's why I shared it.
Rajiv bhai, when you mention, giving a platform, let me tell you, I think KDO CA Association was the first platform where I had given my first public, session.
Yes.
And till that time, I had so much of huge stage fear. And I think that was the first moment where I think, under your leadership, when I joined in, I think that was the first moment. And today, I keep speaking on so many forums. You rightly said, that platform is something what is very, very important.
And let me
a lot
tell
of
you,
young people should come up and take this opportunity.
Let me tell you, Divya is now a star speaker. Let me tell you the way she is speaking. I have occasion to listen to her speech at the KDO platform, but a lot of flyers I am getting, etc. And we are proud that our own members have escalated herself and taken this. Opportunity comes to many, and you have converted the opportunity into prosperity. So that is very important. I think we can have many more Divya from our groups over a period of time. So thank you on my personal behalf. Anyway, Charvik, if Karan has anything to say, otherwise we are through.
I have a couple of sentences to say.
Yes.
So first of all, sir, I thank you for guiding me entirely. In fact, while preparing also, you had told me कि ये slide ऐसा है, ये slide ऐसा है. So thank you so much for always giving me the guidance on this front. And I am thankful to KDOC Association as well to give me this opportunity to share my thoughts. And so that's it. Thank you.
Karan, somebody, Yogesh by writing, please